Hello everyone, my name is Amin Rahman Domal, and today I am going to show you that how to complete a financial statement, which is the consolidated statement of financial position in a very easy way. So there are many students who actually don't know how to do this consolidated statement of financial position, and often they think that it's very hard, but actually it is very easy. So there are lots of videos about this consolidated statement of financial position, but most of the student, as I know, that they don't get that. They don't understand this overall concept of the consolidated statement of financial statement. They don't understand that the overall concept of this financial statement. So here today I am going to show you that how to compute the consolidated statement of financial position in a very easy way. So if you can just watch this video, what I believe that if you can watch this video, you will learn the consolidated or financial statement very easily. So let's not waste any more time. Let's go back to the math. And in this math, at first, let's read out the overall question that we are going to solve today of this consolidated statement of financial position. So at first, let's read this question. So here, the following are the summarized balance sheet of a group of companies as at 31 December 2016. So here we can see the assets, which is the non-current assets, the PPE, which is the property, plant and equipment, is respectively 90,000 for Dhaka Limited, 60,000 from Chittagong Limited, and 50,000 for Sylhet Limited. So there are three companies which we will actually compute about these three companies. So Dhaka Limited has 90,000 PPE, which is property, plant and equipment. Chittagong has 60,000 and Sylhet has 50,000. Then we can see that investments, that 40,000 Taka one shares in Chittagong Limited is 50,000, and 30,000 Taka in one share in Sylhet Limited is 45,000. So when you're gonna watch this figure, like when in the investment part of the consolidated financial statement, if you see these kinds of in this kind of information is given, and if there is just like you have three companies, but they're just talking about only two companies, they're talking about Chittagong and Sylhet, like 40,000, they have 40,000 Taka one share in Chittagong Limited and 30,000 Taka one share in Sylhet Limited. So when we're gonna witness this kinds of investment, and which is actually written in another company which is Taka Limited, you have to understand that here the Taka Limited is the holding company and Chittagong and Sylhet Limited is subsidiary company. Why? It's very simple, because Taka Limited is owning Chittagong Limited's 40,000 Takas, which is actually the value of one share, 50,000. So Taka Limited owns 50,000 from Chittagong Limited's share, and here we can see that Sylhet Limited, here the Taka Limited also own 45,000 Taka's share from the Sylhet Limited. So as we have understood that Taka Limited owns both of the investment of Chittagong Limited and Sylhet Limited. So by that we have to understand that Taka Limited, here the Taka Limited is the parent company, which is the holding company. Now I think you can understand, I think all of you have understood about this video, about this overall concept of investment. So now let's talk about the current assets. So the current assets of Taka Limited is 22,15,000, and the Chittagong Limited has 50,000, and Sylhet Limited has 30,000. So the total assets is, here we can see that it is 4 lakh 1,10,000 and 80,000. Now let's talk about the equity and liability part. So here we have, at first we have the capital and reserves, we have the overall information on the ordinary shares of capital, which is 1,90,000 for Taka Limited, 50,000 for Chittagong Limited, and Silat Limited has 40,000. Then we have reserves, where Dhaka Limited has no reserve, so we have given a nil here, and Chittagong has 10,000 reserves, and Silat Limited has also a nil. That means they also don't have any reserves, just like Dhaka Limited. Next, we can see the retained earnings, the value of retained earnings for these three companies. So then we have the total equity for these three companies. So then we have the current liability and then the total equity and liability. So I think we have understood about the balance sheet. So now let's talk about other information which is given below. We can see here, as you can see here, it said that Dhaka Limited purchased its shares in Chittagong Limited 5 years ago when there were retained earnings of Taka 20,000 and a balance on its reserves of Taka 10,000. So here Silat Limited had retained earnings 16,000 when Dhaka Limited acquired its shares on 1st January 2016, and at the end of 2016 the goodwill impairment review revealed a loss of Taka 300 in relation to the goodwill acquired in the business combination with Silat Limited. So now it's time to prepare the consolidated statement of financial position. So all this information, as we have all this information will be helpful for our workings. As you know that in this kind of consolidated financial statement, you just can't make it's not easy. You have to go for the workings. Without the workings, you can't make the consolidated financial statement. But these workings are very, very easy. If you just watch the full video, which I'll talk about now, I think you will understand this overall consolidated financial statement very easily. And I mean very, very easily. So now let's get started here, as we will go to the first working now. So at first you have to remember the workings, that how the working will start. So here the first working, remember the first working is about establish group structure, and the second working is about the calculation of net assets of Chittagong, which is actually the companies which are subsidiary companies. We're going to calculate the net assets of both of the subsidiary companies. Here we have Chittagong and Silat, so we'll compute both of those net assets. And in the third working, we'll calculate the goodwill. In the fourth, we'll calculate the non-controlling interest, and in the end, we'll finish the workings with calculating the overall calculation of retained earnings. So at first, let's talk about how to we can say how to compute the working number 1. So here it is important to understand that in working 1 we actually establish the group structure. Now if you actually calculate, or if you compute most of the consolidated financial statement, you will find out that most of the time the percentage is given in the math, is given in the financial statement. You will find out that. So in most of the math, you will get the percentage or fractions here in the investment section. But in this financial statement, this one is here. They haven't gave any kinds of percentage or fractions. So here we have to calculate the percentage. We have to explore the percentage. We have to compute the percentage, because without the percentage or fractions we can't make a group structure. So here, as we can see, we have 40,000 taka, 1 shares in Chittagong Limited. So the overall is going to be, if we calculate the first group structure for Chittagong, then it's going to be like this: 40,000 divided by 50,000 into 100%, and then it's going to be 30,000 divided by 45,000 into 100%. If we calculate this, we will find out. Here it is. Look at that. Look at that. Just what I said. So establishing group structure is very simple. We have to at first we need to write the 40,000, which is actually given for 1 share. The price of 1 share par is 40,000 divided by 50,000 into 100%. So Chittagong Limited has 80% of the we can say in the group structures, the overall 80% control has Taka Limited of Chittagong Limited. So Chittagong Limited's 80% control belong to the holding company Taka Limited. So next,
according to Wikipedia, a company abbreviated as Co.
So secondly, we have the Silat Limiteds, which is we can see that we have calculated at the very beginning the group structure, which is 66.67%. So we can calculate the NCI, the non-controlling interest of Silat Limited, which is equal to 100 minus 66.67. So we're just going to deduct it from 100 and we'll get 33.33%. So we have got both the non-controlling interest from this group structure, and for Chittagong Limited we got 20%, and for non-controlling interest of Silat Limited we got 33.33%. Next we'll go to the working number 2. So here in the working number 2, let's talk about the working number 2. So here, as you can see, the working number 2, here we have to calculate the net assets of both Chittagong Limited and the Silat Limited. Again, you have to understand that we have to understand that here it is important to understand which company is subsidiary and which company is holding. So as we have understood the overall this structure of this overall financial statement, we have understood that Taka Limited is the holding company and Chittagong Limited and Silat Limited is the of course the subsidiary company. So here Chittagong Limited and Silat Limited, we have to work with those two company every single working. Most of the working we have to work with those two subsidiary company. So in the working 2, here at first we have to write three things, including at year end Taka, at acquisition Taka, and then post acquisition. There's 3 things. So here at the very beginning we have to find out the share capital of Chittagong Limited. So let's go to the question. So here it is. We can see that here it is. The ordinary share capital of Chittagong is 50,000 and Silat Limited is 40,000. So we have to write 50,000 here. 50,000 for Chittagong Limited at the acquisition. So here at acquisition we don't have any kinds of adjusting entries. So we have to write directly 50,000 at year end, and at acquisition they're going to be 50,000. Always remember that when we have these two things, at year end and at acquisition, the result of these things will be written in the post acquisition. So here we have to deduct this. It goes like this, like a formula. It is that at year end minus at acquisition. So we have to understand it's very simple. We have to deduct 50,000 minus 50,000 is equal to 0. Every time, whatever the value it is, always remember that post acquisition, the formula of post acquisition is at year end minus at acquisition. And very simply, as we have talked about the Chittagong, the Sylhet Limited, it has 40,000 as we have seen in the table. So it will also be 40,000 minus 40,000 is equal to post acquisition is nil. Now, Chittagong Limited has other informations, more information than Sylhet Limited, which includes reserve. In the table, let's go to the table. Here it is. Look, we have reserve. Dhaka and Sylhet doesn't have any reserve, but Chittagong Limited has reserve, which is 10,000. So we have to write this 10,000, and the information is also given here. That here, Dhaka Limited purchased its share from Chittagong Limited 5 years ago when there were retained earnings of Dhaka to 20,000, and the balance on its reserve is 10,000. So we have to write 10,000 reserve. So we have to write the reserve, and then it's very simple. 10,000 minus 10,000 post acquisition is 0. Now we have to write retained earnings. So let's check out both the retained earnings of the Chittagong Limited and Sylhet Limited. Let's go to the table. So here in this financial statement, look at this. Here we have the retained earnings, so we have to work with the subsidiaries. So here it is Chittagong Limited, the first subsidiary company, has 30,000, and here Sylhet Limited has 16,000 of the retained earnings. So what we have to do is very simple. We have to write 30,000 in the Chittagong Limited's at year end, and 16,000 here at year end of the Sylhet Limited. Now, as you can understand here, at acquisition for the Chittagong Limited, they have 20,000 taka. So how they have that? As we have read the information at the very beginning, I think you'll understand that here there is information that it said that here retained earnings of taka 20,000 and a balance on its reserve is 10,000. So we have the reserve, we have retained earnings of 20,000, and we have reserves of 10,000. So we have already written the 10,000 reserve, but we haven't written the 20,000 at acquisition, which will be written in the acquisition. So we have to write it here at acquisition. So 30,000 minus 20,000 is 10,000, and Sylhet Limited doesn't have any more information, just two: share capital and retained earnings, and here the post acquisition is nil. So here you can see we have working two has been completed, and from Chittagong Limited we have at the year end 80,000, acquisition 80,000 and 10,000. And Sylhet Limited has 56,000 at year end, acquisition 56,000, and post acquisition is nil. Now let's talk about the working number 3. So here in this working number 3, at first we need to it is all about calculating the goodwill. So at first we need to write the two of the subsidiary companies names, Chittagong and Sylhet Limited. Then we need to write the consideration transfer. Consideration transfer is 50,000 and 45,000. Here it is. As you can see. Consideration transfer actually means investments, which is 50,000 and 45,000. So we have to write this to value here in the working number 3. 50,000 and 45,000, and then we need to add the NCI at acquisition, which we have already calculated, 16,000 and 18,000 and 665. which we have already, or which it is actually, we have calculated the percentage. So here we have calculated 20%. As you can see at the very beginning, 20% was calculated for Chittagong Limited, and Sylhet Limited was calculated 33.33%. So here we have to give the, we have to actually just, we have to write so here it's going to be very simple. Here at first we have to actually just go back to the percentage, which is, we have 20% and 33.33% of NCI for Sylhet, and for Chittagong is 20%. So here it is important to understand that at the very beginning, at acquisition, we have 80,000. So here we have to write the 80,000 into 20%, which is equal to 16,000. So here we have to write 16,000 for Chittagong, and for Sylhet is going to be 18,665. And it's very simple, is that we have 56,000 for at acquisition of Sylhet, so 56,000 into 33.33% is equal to 18,665. So that's what we have to write here, as we have the NCI at acquisition for this, for both of this Chittagong Limited and Sylhet Limited. So here, as you can see, the net assets at acquisition, we have to write both the acquisition we have again, which is 80,000. We have to deduct this, both the acquisition, 80,000 and 56,000. We'll get minus 14,000 here, and 7,664 for Sylhet. And now impairment loss, as we have read the question at the very beginning, there was 300 loss for Sylhet, so you have to deduct 300 here, and here it is. Working number 3 is completed, which is Chittagong Limited 14,000 minus 14,000, and Sylhet Limited is 7,364. So next is the working number 4, which is the calculation of non-controlling interest. So it's very simple. We have to write the 16,000 of Chittagong Limited and Sylhet Limited 18,665 that we have calculated just now, and we have to write the NCI at post-acquisition. So here the post-acquisition we have was at the very beginning, as you can see. So you can see that we have 10,000 of post-acquisition for the Chittagong Limited. So here we have to write the overall, as you can see, we have to write both the 10,000, which will be multiplied by 20%, as we have only one post acquisition for Chittagong Limited, and it's going to be multiplied here, and here Chittagong Limited has 18,000, and there is no post acquisition for Sylhet, so it has only 18,665. And the last is the working number 5, which is the calculation of retained earnings. So here in the retained earnings, at the very beginning, we have to write the retained earnings of Dhaka Limited, which is 60,000 at the very beginning. I think we have seen that. Let's see it again. Here it is. So 60,000 for Dhaka Limited. We have to write 60,000 here, but we can't write the retained earnings of both the subsidiary companies. We have to write here. We have to write the post acquisition. So we have, as we have seen, that at first it's very simple. Just understand this. At first we need to calculate the retained earnings in working number 5. So here at first we need to write the retained earnings of Dhaka Limited, which is 60,000. We have find out from the financial statement, and we can't write the Chittagong Limited and Silat Limited's retained earnings here. We have to write the post acquisition of Chittagong Limited and Silat Limited's here. So there is only one post acquisition that we have seen a couple of minutes ago. The Chittagong Limited has 10,000 of post acquisition, so it's going to be 10,000 into 80%. 8,000 is the Chittagong Limited's post acquisition, which will be which you need to write here. And Silat Limited has no post acquisition, so they're going to be a nil. And credit deposit in Chittagong is 14,000. So here it is the minus 14,000 that we have. The minus 14,000, which we have in the working number 3, we have to write this loss here as plus, and we need to give the name as credit deposit in Chittagong, and then they're going to be the impairment cost. We have to minus this, and we'll get 81,700. That is working number 5. And at last we need to calculate the Dhaka Limited's financial position, the consolidated statement of financial position. At first we need to write the assets, which is the non-current asset, the PPE. We have to plus both the property, plant and equipment of Sylhet, Dhaka and Chittagong, and we'll get this result here. So then we have to write goodwill, which is from working number 3. We have to just put those amounts. So now the things have become easy. Things are easy now because we have completed the workings. So now we just have to write the values from the workings. The current assets is from the question. We have 3 companies, so we have to plus them all, and then we'll get the current assets, the total current assets, and then we'll get the total assets by plussing all those amounts. Then we have equity and liabilities. At first we need to write the equity. We have to write share capital, which we have is 1,90,000 for Dhaka Limited at the very beginning of the question. Let's just see this about. Here it is, 1,90,000 for the ordinary share capital. So we have to write the 1,90,000 of Dhaka Limited. We can't write the subsidiary because it's about Dhaka Limited, the holding company. I think you guys have understood that. And then we need to write the retained earnings, working number 5's result of working number 5, and then non-controlling interest, working number 4. From the result of working number 4, we'll get this results. And then the current liabilities, we have to plus all the current liabilities, and we'll get 1,94,000, and then we have to just plus it, and we have to just total it, and then we'll get the total equity and liabilities. And as you can see, both of the assets and equity and liabilities are same, which means the answers is right. Everything has been right here. So from the very beginning to now, I think you have understood the consolidated statement of financial position. I hope you understand this overall mathematical problem, because as I have given this video, anyone who will actually watch this video, they will learn the consolidated of the statement of financial position very easily, because the overall the steps I have talked about here is actually pretty much is simply very easy. If you just watch this video, you will learn the consolidated statement of financial position very easily. So that was my video for now, and in the end I want to say thank you very much.